Good morning, everyone. This is Black Forest coming to you with another market analysis video. This morning, we're going to be looking at the USDCAD. Now, before we get started to break down this currency pair, we have to state that this video is for educational purposes only. This is not financial advice. Well, we all know why you guys are here. You guys are here to find good, credible Forex content that can help you improve your abilities as a trader and to help put some extra money in your pocket, okay? So with that being said, let's go ahead and break down this currency pair, okay? Now with this currency pair, before we break down, before we get into the technical analysis, let's get into the fundamental analysis of each currency, first starting off with the CAD. All right. So the CAD continues to be one of our more lukewarm currencies heading into the latter part of this trading week. It's right there in the middle in which oil is the real decider on whether it's going to behave weak or strong. And with the dropping of oil prices right now due to the American government releasing its oil reserves into circulation to bring about lowering the gas prices at the pumps, we are starting to see a weakening of the Canadian dollar due to the drop in the oil, due to the drop of the oil per barrel price. Okay. So as long as that continues to drop, we're going to see a weakening CAD, but we do have some news coming out about the CAD with its GDP and about at 8:30. So we're going to have to see also how that plays out as well. But even if we have very good positive news with its GDP, then weak drop in oil prices is not going to really affect the currency as much as it is if we do see a negative GDP news. So we're definitely going to have to pay attention to that. The U.S. dollar this week has had did have some negative news come out, but we've had a lot more positive news and negative news come out about the U.S. dollar. Then also with oil prices dropping, with oil prices dropping, we have consumers having a lot more money to spend in the stores. That money being spent in the stores is growing the American economy. Growth in the economy is causing the dollar to get stronger. Okay, so basically, this whole entire pair is both contingent on oil. If oil continues to drop, the CAD is going to get weaker and the USD is going to get stronger. If oil starts to pick back up, then the CAD is going to get stronger and the USD is going to get weaker. Now, traditionally, oil does not affect the US dollar's strength or weakness, but being that gas prices are so astronomically high, people are starting to basically spend more money on gas and spending it on what they want from the stores, and the only thing they're getting from the stores is just their bare necessities, was causing the economy to stagnate and to even shrink. But now that consumers got more available money to spend in the stores, we're starting to see growth in the economy and the USD pickup. Okay, so when you're trading currency pairs, it's just not all about coloring book on a chart type action. You got to actually kind of know somewhat what's going on with each currency. Now, you don't have to be an economist to which you're being, starred on Bloomberg or anything like that. But you do have to know a little something about the what's going on about the industry that you're in. Okay, and that's with anybody that's any type of professional. Okay, so now let's discuss the fundamentals of what's going on the charts. Okay, so we have a classic, very good positive V formation that definitely looks like we're going to be heading towards the right direction. We could see an initial drop around this area right here before we continue to go up towards the long side. We'll probably cover this whole entire wick until we get to this area here before we start getting shaky and coming back down some before we start heading back up again. But that's if the current fundamentals hold as they are. If we start to see a reversal in the current fundamentals in which the gas prices start going up, the Canadian dollar starts getting stronger, the US dollar starts getting weaker, we could see a drop to here before we range out and head towards this side here. Okay, if the current fundamentals still hold, we are going to have an initial drop to this area here before we pick up, cover this wick, come back down, and then continue to go back up. That's if the current fundamentals hold. But if the current fundamentals inverse because of increasing gas prices, then we're going to have a drop to this area here, range out and go down. But the more likely scenario is we're going to drop a little bit and continue to go into the long position. Okay. I would suggest waiting for the economic news to come out and see how the charts react and then make your move from there. Because none of us can tell the future unless all of a sudden mutants are now walking the earth. Okay. So with that being said, happy trading.